Hi there, welcome to the Money Show with me, Snehi Shah. Today we're diving into an incredibly important topic, investing in your own education and the powerful impact that upskilling and reskilling can have on your career. Whether you're considering taking on a student loan to further your education or exploring the world of online courses and certifications, making the right choice today can pay off significantly in the future. Now, joining us today to discuss how to make informed decisions about education, career growth, managing your student loans, understanding what a return on your investment in the terms of education could mean. Joining us today is Nisreen Mamaji, the CFP, MoneyWorks Financial Services. Hi Nisreen, thanks so much for taking the time out and joining us on the show. Always a pleasure to have you. And my first question to you is, Nisreen, we hear the term ROI, return on investment, a lot when it's the financial world. We're talking about return on investment specific to stock market or other investments. But help our viewers understand what return on investment in the context of education could mean.
Sure. So basically, an investment in education is typically an investment in yourself. Okay. So how does it help in the long run? Let's explore the concept of return on investment, that is ROI in education, how upskilling and reskilling can create new opportunities for you, and some strategies for deciding and repaying student loans in a way that suits your budget. So basically, what is ROI in education? So in finance, ROI measures a gain from an investment compared to its cost. So when you invest in learning new skills, which is upskilling, or learning a completely different set of skills, which is reskilling, the ROI comes as increased job opportunities, obviously, higher earning potential, or personal satisfaction. So in education, your returns might include a good job, a steady income, or future career growth. So those are the reasons that you could possibly want to upskill or reskill. Now, for example, suppose for a 1-year programming course, it's going to cost you, say, 50,000 rupees. But after completing it, you get a job where you're going to earn about, say, 4 lakh rupees. So the first year ROI of your course would be very high because you would earn that, typically very in say, a month or two. So that's where you compare the return of investment on education. Now, upskilling is all about, improving or adding advanced skills in your current field. For example, as a digital marketer, you might take a course in data analytics. And reskilling means that you're learning a skill which is completely different from what you have been used to for a different career. So, for example, a person working in sales might decide to go in for coding and become a software developer. So, both those options are available to you for upskilling and for reskilling. So investing in upskilling and reskilling helps you remain competitive in the job market and technology, and also exposes you to various other industry also, and jobs that might not exist tomorrow. So, what you're doing today, you're looking for tomorrow. You're basically becoming more competitive for job opportunities for later. So new roles also keep on emerging as industries evolve. So by continuously learning, you'll have a better chance of staying relevant and improving your earning potential, or staying relevant and improving your earning potential. So both the opportunities are available to you. Say, for example, a data course, a data science certification might cost you, say, 1 lakh rupees, and you could lead to a career where your average salary is about 8 lakh rupees. So that gives you an excellent ROI over time.
Okay, thanks for putting that into context for us and also giving us a sense in terms of numbers and how that could make a difference when it comes to deciding if the ROI is worth going for or not. But Nisreen, before we move ahead, could you just take a minute or so to explain our viewers the difference between upskilling and reskilling?
So like I mentioned earlier, upskilling is in your same job. You're just taking a course or two. Like if you're in marketing, you're taking a course in, say, creative writing or some advanced skill in your particular field. And reskilling is for something which is in a completely different field. Like if you've been in marketing and you're taking a certification in data analytics. So you're adding another skill to your repertoire for a different career. So that's the difference between upskilling. Upskilling is in the same job profile, but a higher qualification. And reskilling is for another job profile completely, where you find that, maybe you're kind of bored in the current job or you don't have much advancement. You're reskilling to enter into a completely different area of work. So that's the basic difference.
And when contemplating whether to take on a student loan, how can one assess if it's a wise financial decision? Is student loan debt considered to be good debt? And under what circumstances does it make sense to borrow for education? Because student loan is something that we see quite commonly, but now that you've explained to our viewers what an ROI is and what a good ROI is, could you also help us understand in what sense does student loan actually translate into getting on some good debt?
So, different loans have different interest rates and terms. So, the lower the interest rate, the less you'll have to pay over a period of time. For example, government-backed education loans in India offer interest rates as low as even 7% or 8%, which can be manageable in the longer run. So, if you take a longer tenure and interest rates which are in the 7 to 8% range, you will find it affordable to repay in the future. Secondly, you also have to consider what will be your salary after this particular course is completed. If you plan to borrow, say, 2 lakh rupees by completing a bachelor's degree in engineering, and you should research and say that your average starting salary should be at least 5 lakhs or more, so that you will be in a capacity to repay the loan as well as manage your current expenses, because it's possible that after your degree, you could be living in another city. You will be having, your living and accommodation, etc. expenses that you have to pay yourself. You will no longer be staying with your parents. So these are the sort of expenses that you need to consider: fixed expenses and variable expenses. And after that, you calculate whether, the EMI will be affordable for you or not. So typically, you will have to start with what is the loan amount I'm taking and what is the average salary that I start with post this course. So both these things need to be considered, the tenure and the interest rates. If you look at a few of these points, also look out for scholarships and grants, because these days you do get a lot of scholarships and grants, which are government or corporate backed. So if you get any of these, of course, your, tuition fees will be reduced to that extent. Also look out for, your future monthly payments, whether your EMIs will be affordable or not. And also you can look at part-time working or internships while you're studying. Okay. So part of the tuition fee can be recovered by working part-time, say on weekends or during the day, during the week, if you manage to find a course which is not, so challenging that you won't have time to work at all during the week. So these are some of the ways that you can subsidize the cost of tuition and living, if you are living also in a dormitory while studying for the undergraduation or postgraduate degree, and then working out the cost post that qualification, what your EMIs will be and what your salary will be. So do the research in advance so that you know that you will be able to afford this in future.
Okay, so thanks for that view coming in, and also wanted to understand, once a viewer or once someone has decided to go for a student loan, how do you decide which type of student loan is the right one for you? What are some of the factors that you need to see, some boxes that need to be ticked off when you are deciding which student loan to go for?
Yeah, so as I said earlier, you can approach a bank. So there are government banks and there will be private banks, as well as there are corporate institutions which offer student loans. So explore all these options, but start with a budget. So make a monthly budget that includes the loan repayments, after you've got your qualification and after you started working. For example, if your job pays you 30,000 per month and your loan EMI is about, say, 5,000, you still have 25,000 left over for your other fixed and variable expenses. So make sure that, you have done the budgeting in advance. Find out the interest rates from various, types of banks, private sector banks, public sector banks. Work out which is the least rate of interest and the highest tenure. Also use your any extra income wisely. So if you receive any bonus or a gift or any extra income, make sure that, you put it back into the loan, etc. Sorry, and talk to your lender if needed. And also continue learning. So these are some of the points.
And Nisreen, lastly, once a loan has been acquired, it's been mobilized, the education is over. Now it's time to repay the loan back, right? Once, let's assume that the viewer or the person who's taken the loan has gained employment and is now on the way to repay the loan. Do we have Nisreen with us? I believe we do have. Okay, so we do have Nisreen with us back. And yeah, Nisreen, so like I was asking you, let's assume that now it's time to repay the loan. What could you suggest? What are some ways in which this entire anxiety about repaying the debt that you had taken can be reduced, can be alleviated? And what are some easy tricks and methods to follow, or a checklist to follow when you are repaying a student loan?
Sorry. So as I said, start with a budget. Speak to your lender. If you're having any trouble making the payments, contact your lender. Many banks in India offer options like temporary reductions in EMIs or an extension of the repayment if they know that you have challenges in advance. Use any extra income wisely and consider paying more than the minimum. So if your EMI is 5,000, try to pay back 6,000. And start with a budget. So those are some of the ways that you can definitely, help with your student loan, a simple strategy.
On that note, we'll let you go. Thank you so much for joining us on the show, helping us understand the entire concept of ROI on the student loan, why a student loan could be important to take at the right time, how to decide which one's the right one for you, and how to repay it without having the entire anxiety or the pressure of a debt or a credit on your head.
If you like this video, then like, share and subscribe to ET Now.